Behind the billions.
You were staring at the chart, carefully watching the price action. You saw what looked like a perfect textbook breakout. You entered the trade with absolute confidence, expecting to make a profit. But within a matter of milliseconds, the green candle turns red, and your account starts bleeding. Do you ever feel like someone is standing right behind you, watching your screen? Do you feel like the entire stock market is specifically rigged to steal your money? You are not crazy, and your terrifying suspicion is 100% correct. Right now, deep inside the massive, heavily guarded server farms of Wall Street, a highly advanced algorithm is hunting you. Today, we are going to expose the most meticulous, cold-blooded, and entirely legal looting system in the history of capitalism. It is a massive scam known as payment for order flow, or PFOF. For years, we have been living under the sweet, deceptive lie of commission-free trading. Modern brokerage apps like Robinhood lured in tens of millions of retail investors by preaching the democratization of finance. They promised zero fees and zero commissions for everyone. But this was never a generous benefit. It was a carefully laid trap. In modern capitalism, there is absolutely no such thing as free. If you are using a service and you are not paying for the product, you are the product. When you tap the buy button on your smartphone to purchase shares of Tesla, that order does not go directly to the public stock exchange. Instead, these free brokers take your private buy and sell orders and sell that data for massive profits. Who is buying your data? Giant high-frequency trading, or HFT, institutions like Citadel Securities, led by billionaire Ken Griffin. To understand why Wall Street would pay billions for your order data, you have to understand their obsession with speed. Just how important is a single millisecond to Wall Street? There is a completely insane true story that proves exactly how far they will go. The physical distance between the futures exchange in Chicago and the stock exchange in New York is about 800 miles. Using standard fiber optic cables that followed highways and train tracks, it took data 16 milliseconds to make the round trip. But in 2010, a Wall Street telecom company decided that 16 milliseconds was simply too slow. Driven by sheer greed, they decided to spend $300 million to shave just 3 milliseconds off that transmission time. They literally blasted a perfectly straight tunnel through the Allegheny Mountains. They blew up solid rock with dynamite and drilled under rivers to lay a direct, unbending fiber optic cable from Chicago to New York. They spent $300 million just to arrive, 0.003 of a second faster. Why would anyone do this? Because when the market shifted in Chicago, the algorithms riding this private, high-speed cable could reach New York 3 milliseconds before the retail investors. This allowed the Wall Street machines to front-run the market, sweeping up all the available shares before anyone else even knew the price had changed. That $300 million construction cost was fully recovered in just a few short months. To Wall Street, 1,000th of a second is not just a measurement of time. It is an invincible cheat code, used to print billions of dollars out of thin air. But physical speed is not the only weapon they use against you. These machines have another brutal tactic to mock your chart analysis and empty your pockets. It is a manipulative strategy known as spoofing. You have probably looked at a trading chart and thought you spotted a massive wall of buyers forming a strong support level. Feeling safe that the price would not drop below that wall, you hit the buy button. But that support level you saw was a complete 100% illusion. High-frequency trading algorithms generate tens of thousands of massive buy orders per second that they have absolutely no intention of ever executing. They create a fake visual wall in the order book to trick retail investors into thinking the asset is safe to buy. But the exact millisecond you and other retail traders enter the market, the machine cancels all of those massive orders. The support level vanishes into thin air, and the stock price instantly collapses. As terrified retail traders panic and sell their shares at a massive loss, the algorithm is waiting at the bottom. It scoops up your panic-sold shares at a massive discount, making a risk-free profit. While you were studying technical indicators and drawing support lines, Wall Street's machines were painting fake lines and erasing them just to trigger your stop losses. When you combine the payment for order flow system with these predatory algorithms, the result is absolute mathematical robbery. Let's say you submit a market order on your app to buy a share of Tesla for $200. Citadel's quantum computers see your order, a fraction of a millisecond before it reaches the broader market. Moving at the speed of light, the algorithm buys the available Tesla shares on the open market. for $199.99. Then, just 1 millisecond later, it turns around and sells that exact same share to you for $200. You might feel relieved that your order was filled quickly, but you were just legally robbed of 1 penny by a machine. 1 single penny might sound like absolutely nothing. But what happens when tens of millions of retail investors make billions of trades every single day? Wall Street's algorithms rake in billions of dollars every single year with absolutely zero risk, just by cutting in line. Because the algorithm always sets the price against you the moment you enter, you are mathematically guaranteed to start your trade at a disadvantage. If you want absolute, undeniable proof of how blatantly rigged this system is, look at what happened in early 2021. Remember the GameStop saga, when a massive army of retail investors banded together to fight back? They pushed giant Wall Street hedge funds to the absolute brink of total bankruptcy. Just as the retail traders were about to break the algorithm and win the game, what did Robinhood and Citadel do? They literally deleted the buy button from the trading app. They left only the sell button active for retail traders, artificially forcing the stock price to crash. They blatantly manipulated the open market to save their billionaire Wall Street friends from complete ruin. When the rules of the free market turned against them, they simply pulled the plug on the entire console. The aftermath of this massive systemic fraud is even more depressing. In 2020, the SEC finally caught Robinhood for deceiving its customers about selling their order flow to Wall Street. But Robinhood was fined a mere $65 million. The ultimate boss of this operation, Citadel Securities, was previously fined just $22 million for similar violations, compared to the tens of billions of dollars they have extracted from the American public. These fines are not punishments. They are just minor parking tickets, classified as the standard cost of doing business. Right now, major financial markets like the United Kingdom, Canada, and Australia have completely banned the PFOF system. They recognize it as an obvious scam and a massive conflict of interest against the retail investor. But in the United States, the supposed global beacon of the free market, this predatory practice remains 100% legal. This is entirely thanks to the massive lobbying money Wall Street pours into the pockets of Washington politicians. So the next time you trade, do not fool yourself into thinking you read the chart perfectly and timed the market just right. When you buy, the price drops, and when you sell, the price magically goes up. It is not a coincidence, and it is certainly not bad luck. It is the flawless, ruthless math of an algorithm designed to squeeze every last drop of wealth from human psychology. Today, just like every other day, Wall Street's supercomputers are stealing your milliseconds, and they are quietly laughing at you.
Tap to subscribe. Watch more untold stories next.